That would spark the yen spiking and then a reverse of that carry trade.
A repeat of the first week of August when
exactly.
global equities markets fell.
It was a deleveraging moment. It's a pure momentum play. Just this is about liquidity flowing elsewhere. Both large caps and small caps are very pricey from a fundamental perspective, but you can't time the market based on fundamentals. That's the issue.
Michael Gayed returns, publisher of the Lead Leg Report. Good to see you, Michael. We're going to be talking about Michael's outlook for 2025, how he's positioned his portfolio, risks and opportunities he sees for investors. And if you're listening and watching now, comment below if you have any questions for next time when we have Michael back on again in the new year. Always good to see you all, Michael. Good to see you.
I'm glad you're already inviting me. That's good to know that I'm not going to be excommunicated after this.
Well, you know what? We'll see. Today is full of the theme of the day is full of risks and uncertainties. China and U.S. excommunicated each other in the last Trump presidency. We'll talk about whether or not that's going to happen today. But okay, well, Michael, let's start with this tweet that you made. I don't know if we can still call it tweet.
Which one? Because there's so many that I put out.
Yeah. Well, this one in particular, I'm going to share my screen. Live shot of me preparing for an uncertain 2025. You're standing in front of a vault of gold with a bunch of lumber.
Lumber, baby.
People should be aware that Michael has an award-winning lead leg lumber to gold ratio. So tell us about this image. What are you prepping for exactly? Why do you have a bunch of logs and a vault of gold in this presumably AI-generated image?
Well, first of all, good guess that it's AI. And I think it's just kind of funny and fun. No, look, I mean, for the last, I don't know, year, I've been saying gold is sending a warning. And that warning has not cared for the stock market, as we've seen. But I still think gold is sending a warning that the things are very off. I think also Bitcoin is sending a warning in the most recent move. But the whole point of this is to say that I suspect that gold is going to keep on rallying into next year, and that if Trump is ultimately going to be a lightning rod for more animal spirits, then housing construction probably picks up as well, which is not exactly great given unaffordability. So yes, I suspect both will go up. I suspect gold will go up more, though, in that sense. But yes, it's just a little comedic relief, folks. That's all.
Well, what's the rationale for gold going up? Gold did come down after Trump won. The gold market clearly didn't like Trump's victory.
Yeah, initially, and then has since.
Yeah, you're right. It has climbed back, although it hasn't peaked. It hasn't touched his $2,900 peak yet. But anyway, yeah, the initial reaction to Trump's victory was not bullish for gold. What is the market discounting there?
Well, I mean, I think to the extent that gold was just selling off probably because it already had a big move. I mean, I don't think it's sort of the gold market sensing some fundamental change. It could have just been, sell and use, and it's an excuse to take some profits. I think gold is going to continue purely just because nobody thinks it will. I mean, there's still a lot of skepticism around gold, and the shiny object of the moment happens to be on the blockchain with Bitcoin. And I think it's just causing a bit of a distraction from the momentum players. But the longer term argument for gold, I think, makes a lot of sense as an alternative long only asset that tends to do well when you have risk off cycles. It is interesting. I do think that the market probably is pricing wrong the implications of Trump being president next year. I know there's a lot of hype and excitement around deregulation. I know there's a lot of hype and excitement around growth and lower taxes. People seemingly forget that, and it's just fact, folks, historically, the S&P 500 does better under a Democrat than a Republican. Now, that is skewed, you can argue, by the 90s, okay? But history actually suggests that returns may be subpar, especially when valuations are as elevated as they are.
Okay, just on that note, the last Trump presidency did pretty well. Let me just take a look, share my screen one more time. So this is the S&P 500, zoom, 2017, his inauguration in January, all the way to COVID was an anomaly. So we're going to discount that. So, but basically until he left office, well, even after COVID had recovered, there's a V-shaped recovery, went up about 60% by the time he lost the election in November 2020. Yeah, it was up 63%. So why did Trump do so well for the stock markets last time? And could this time be any different?
I would say ask Powell and go to the
Okay,
Fed's politics, right? No, no, really, because it's like, the dynamics are totally different. I mean,
sure.
you had zero bound rates, you had QE, and obviously you don't have that now. Now, it is true that financial conditions are incredibly easy. This is not restrictive when you look at financial conditions, when you look at credit spreads. That's very obvious. So you can argue, well, from that standpoint, maybe that's beneficial for risk assets under a Trump administration as long as that dynamic persists. I just think that it's not exactly an apples to apples comparison with what we saw the first term.
Before we continue, I want to tell you about a recent data breach that exposed nearly 3 billion records in one of the biggest data breaches ever. This case highlights just how vulnerable personal information can be in today's digital world and the importance of protecting your privacy online. That's where Delete Me, today's sponsor, comes in. Delete Me removes personal information like your address, phone number, and more from hundreds of data broker websites. It's a service I trust because it makes staying safe online simple and effective. Using Delete Me is easy. Submit your information, and within 7 days, you'll receive a detailed privacy report showing where your data was found and removed. Plus, Delete Me keeps monitoring and removing your data all year long for ongoing protection. Head over to the link in the description down below and use the promo code DavidLynn at checkout, or simply scan the QR code here on the screen to get 20% off on all US plans today. Thousands are already relying on Delete Me to safeguard their online privacy, so start protecting your personal data and information now. Yeah, understood. Michael, so I'll just jump straight to the core of the conversation today. What is the biggest market theme, risk or opportunity for investors in 2025? Prior to this, I know we talked about the Japan reverse carry trade. That was one of the core theses for risk to watch. It happened earlier this summer. We can check out prior interviews with me.
Momentarily. Yeah,
Yeah,
momentarily.
momentarily. We can check out prior interviews with me and Michael, link down below. But anyway, what is it for 2025?
I mean, I think the big question is, are you finally going to get the fabled broadening out of market momentum where small caps lead? I keep on saying for the last year plus, small caps hold the key. Because if small caps are going to break out in a sustainable way, then yeah, you know what? There's probably some real momentum and catch up that could take place. I'm a little skeptical, and I say that I'm a little skeptical purely because typically small caps historically outperform, meaning they're up more, down less against large caps in bear markets. Maybe this time that's not going to be the case. I would love to see small caps run like hell. I really would. I mean, for all the arguments that people throw at me saying, "Oh, you're a perma bear, you're always negative." No, no, no. I would love to see small caps run because it's a lot easier to, in quotes, beat the market by tilting small when there's momentum. It's just there's still this kind of whipsaw dynamic that's gone on in the small cap space. Um, so I think the if you're going to be bullish, you probably do want to play, small caps for mean reversion, keeping in mind by the way that the fundamentals in small caps still suck. Right? Meaning, if you look at valuations on small caps, they're still also very expensive relative to U.S. mega cap and large caps. It's just that there's been no momentum, so momentum begets momentum. If it starts in small caps, it'll likely persist independent of valuations. If you don't have a sustainable breakout and small caps turn around, that is the risk because that then again goes back to the core fundamental problem that I have with this market, which every time I say it, nobody can really counter me. They just say you're wrong, which is that you've got two different messages. Small caps are saying there's default risk, which is why they haven't done all that well relative to large caps the last several years. Credit spreads are saying there's no default risk. So small caps are worried about bankruptcies.
Mm-hmm.
Bonds are not worried about bankruptcies. One of them's going to be wrong. I don't know which one. I think it's going to be the bond market that's wrong, but I've been wrong in thinking that.
Wait, how is the small cap signaling risk of bankruptcy? It's up 20%. The Russell's up 20% year to date. I mean, it hasn't outperformed the S&P, you're right. But that's still not bad. No?
Not bad, but you're still at 2021 highs.
Mm.
Barely, which after inflation is actually negative, right? You're still technically in a real after inflation drawdown versus what we've seen with the S&P. The differential is huge. What's held back against all these financial conditions I mentioned being easy is the concern around these companies not surviving. It's the zombie companies.
So are you suggesting that the Russell 2000 is better positioned from a valuations perspective for
No,
investors?
no, it's a pure momentum play. Just this is about liquidity flowing elsewhere.
Okay.
Because to your point, the valuations are still very elevated also for small caps.
Yeah.
Both large caps and small caps are very pricey from a fundamental perspective, but you can't time the market based on fundamentals. That's the issue.
2023 and 2022 were quiet years for Bitcoin and crypto. Some of that hype is coming back. Some of that FOMO buying is coming back into the markets now. We're speaking the day after Bitcoin just hit $100,000. I wonder if investment capital is going to flow into Bitcoin and the crypto sector next year and out of the tech stocks. Same crowd, no?
Yeah, I think that's an interesting argument. I mean, they are certainly correlated. Um, isn't it funny, by the way, that Bloomberg put a piece out the other day saying the carry trade is coming back with a vengeance? Isn't it funny that the carry trade is coming back from Japan and we're at these highs on the Nasdaq and Bitcoin?
This is a recent article.
Yeah, it's a recent article. I
Okay.
had reposted it
Right.
with my one of my catchphrase words, which
Okay.
starts with F and another term. Um, yes, maybe you can argue there's some reallocation there. I had said at prior, major turning point. I put out this line: when an investment becomes a religion, it's time to lose faith.
Mm.
All right, which goes to kind of your point about the sort of speculative fervor, which is back, and a lot of this does feel like what was happening in the lead up to the 2021 peak. Now, it doesn't have to peak here, right? But it's like when you have the Haktua girl having a meme coin, it's
Yeah.
like here we go again with the silliness, right?
Yeah.
That now okay, it rallied and then crashed. Okay, fine, but still, it's like we're back to the lunacy. So I think it's very clear that we are in a speculative mania. But it's unlike other speculative manias in the sense that it's very concentrated. It's concentrated, you can argue in tech stocks. It's concentrated in Bitcoin and some certain cryptocurrencies. It's concentrated also in levered funds. If you look at trading volume across some of these single stock levered ETFs, I mean, it's very clear we become a gambling nation, right? Everyone's just trying to YOLO into 2x and 3x and individual stocks and, get rich quick. And it's like, yeah, you know what? That can continue. A lot of people made a lot of money, but the last time we had that feeling as a society was the peak in 2021. I'm not saying that to be bearish. I'm just being matter of fact with that.
Yeah, I bring up the comparison between Bitcoin and stocks because even the mainstream media is reporting on the stocks are little changed heading into key U.S. jobs report. This is today. The problem you have is that valuations are stretched across the board, said Keely Teton, portfolio manager at Brian Leonard. So, you're sitting at records, but there's not a lot of enthusiasm or euphoria. Well, that's not true for Bitcoin. Like I just said, it's up $100,000, the fabled 100K mark. So you're seeing the crypto sector rise up a little bit more than the tech sector, which is normal in a bull market that has a higher beta. But I'm just not sensing the same sentiment for stocks. And I wonder if the steam, the momentum is running out. Is my question.
It could be. No, I think so. I would push back and say that I think the euphoria is there when you look at flows into the levered single stock
I
funds.
see.
That because that's peak retail, right?
Mm,
Like that's just pure chasing.
okay.
And it has nothing to do with an investment thesis, retail being smart money or dumb money or whatever term you want to use. It has to do with an underappreciation of how the past behavior is what determines the performance of these single stock funds and levered funds in general, which is a totally different issue than, if Nvidia is going to double by next year. How it doubles is what drives the performance, the path. So we'll see. I go back to I'd love to see small caps run. I think we're in a speculative mania in certain areas of the marketplace. I think that this still is going to end badly. I still think the reverse carry trade is out there lingering and could come back. I've said before I have a bad feeling about December, and I keep saying that because there's a BOJ decision coming up. It seems like they need to hike rates, and maybe they'll just postpone it because it's end of year. But Japan has a real inflation issue. And if the Bank of Japan does panic to try to counter the inflationary pressure, then you might have a repeat of August, which people will say won't matter because look how much we rallied since August 5th when everyone was worried about the reverse carry trade. The fact that nobody's worried about it is probably why you should be worried
Wait,
about it.
you said you're worried about December for that reason, the Bank of Japan potentially raising rates. What could happen in this scenario?
Oh, that would spark the yen spiking. and then a reverse of that
So,
carry trade. So another
so yeah, a repeat of the first week of August when
exactly.
global equities markets fell because the capital markets, especially in Asia, were flowing out. Um,
It was a deleveraging moment. That's really what it was.
wouldn't capital markets be ready for a second time around?
The capital markets are ready until it's obvious they're not ready.
Mm.
I guess this is my point. It's like I think there's a degree of complacency that this risk is still out there because when it happened August 3rd, August 5th, everyone suddenly became an expert on the reverse carry trade. I was getting high fives like crazy on it because I've been talking about it for the longest time. And I myself said they're probably going to rally the hell out of the markets, after that August 5th because
Yeah.
everyone turned so bearish. Now everyone's so bullish and thinks it's not going to matter. This is me just being contrarian, right? In terms of how
Mhm.
I think about the idea that the market is in quotes prepared.
Okay, so
Market's never prepared.
the theory is that Bank of Japan raises rates that makes the yield more attractive for Japanese assets. Capital flows out of U.S. or European assets into Japan. That's what happens.
No, no. What happens is that it's the leverage that was created from the carry trade, borrowing money from Japan, deploying it into the Nasdaq, into Bitcoin, into speculative assets, that then reverses because as the yen then rebounds, which we've seen some signs of because of them hiking rates, interest rate differentials, that creates a margin call, which is really what August 3rd, August 5th was. It was a margin call globally.
That so is that well is that leverage still there? That it wasn't fully deleveraged after August.
And that goes back to that Bloomberg article that I referenced,
Yeah,
which is that it clearly is coming back and it's been coming back.
I
But I keep
see.
going back to like this argument makes no sense to me that people say a large part of it was undone. It's like just take a step back and think for a second.
Hmm.
You're talking about a process of leveraging which has been ongoing for well over a decade, and people are like, "Oh, it's over in 2 days." Like, are you serious? I mean, just it doesn't make any sense at all to think that a 10-year plus process of borrowing from Japan to deploy that capital into other speculative parts of the world
Yeah.
that gets undone because of two trading days. Like, can we like actually think a little bit?
Okay. I need to circle back to Bitcoin and gold. I need to show you this clip. Jerome Powell talking about Bitcoin. Take a listen. We'll respond together.
Dollar or in the Federal Reserve itself, in terms of the system. What do you think of that idea?
I don't think that's how people think about it. I mean, it's so, people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it.
Hold up. So did he? Okay, it's a competitor for gold, not the dollar. Okay, we can talk about that. But did he just call gold a speculative asset?
Yeah, which the one thing I will agree with is that Powell and I will agree that it's not a store of value because and people still don't get it when I attack that. I'm not attacking Bitcoin. I'm attacking people's understanding of definitions. It's about education level. By definition, it's not a store of value. It's an investment. But yes, yeah, is gold speculative? Yeah, sure.
Sure.
Any investment that has tail risk is speculative. There are degrees of speculation. There are degrees of risk, degrees of tail risk. But every investment is speculative. It's just about how speculative, right? I don't buy at all though that Bitcoin is competing against gold because it's like two totally different audiences. Have you ever looked at like the average age of a gold investor? Like actually gold, like
Yeah, I agree with you because I've attended a lot of resource conferences. I've attended a lot of crypto conferences, and you don't see the same crowd.
they wouldn't be anywhere near. It's like one's the generation before, the other one's the generation after. They're not gonna hang out. Come on.
Yeah, there's some overlap. I find the overlap more with gold mining stocks and altcoins. That population overlap because speculating on on penny stocks. But okay, so Bitcoin is a competitor to gold. Let's just end the conversation here. Looking forward into 2025, your most bullish assets: Bitcoin, gold, stocks, small caps, large caps, bonds, whatever the case may be.
I think the two, and it's interrelated. I think the two to bet on. Um, and yes, I've been wrong plenty of times on things, so take it for what it's worth when I say this. I think long duration treasuries and I think small caps, and they're interconnected. Why? Because if you end up having long duration treasury yields collapse, right? Just suddenly there's a deflation scare for all the talk around reflation and inflation and deregulation and growth. That something happens, whether it's the reverse carry trade or something with China, whatever, any number of things.
Yeah.
There conceivably is a lot of movement potential in long duration treasuries to make money in for a trade
Yes.
as yields collapse. But then after that, what's the next move? It will be small caps because in that collapse in yields, now small caps finally have their lifeline, right? Because now they can refinance into lower yields. So I think those two areas are actually probably, I think we'll see, going to be among the biggest winners. At the start of the year, I made the argument that gold and utilities would be the best performing areas for 2024. They have been, even though people will brand me as being negative and bearish. You could have been bearish wrong and long those bearish assets and crushed them.
Okay, so two follow-up questions. So the lumber to gold ratio, are you then expecting the lumber to gold ratio to fall because gold is going up?
Depends on the pace. But yes, you what history would suggest that if I'm right that you're going to have at some point one of those Phoenix Rising flight to safety trades, which I've been waiting on for some time, then lumber to gold will already be weak prior to that. That's what the research
What what
shows
what
factually.
what is your outlook for the lumber to gold ratio into 2025, and what does that mean?
I think lumber itself probably rallies on an absolute basis, going back to my earlier comment around construction and housing.
Okay.
But I think gold will outpace it, which means the ratio goes lower, which makes it more risk off. I do also think that utilities probably do continue to outperform, aside from the AI electricity generation argument. If yields do fall in any meaningful way, then that's the most bond-like sector of the stock market. There's still potential for that to keep on rallying. Yeah, from a sector perspective, not exactly super exciting, but I think that remains a good place to consider.
Treasury yields. Let me just take a look at this. This is the 10-year yield. You're expecting a rally in long-term treasuries, which is to say you're expecting the yield to fall even more.
Right, and actually, if you zoom out a little bit further on that, you
Okay.
will see something which is interesting. That looks like a series of lower highs and lower lows.
Okay.
I mean, if you're going to play the technical game and
Yeah.
look at that peak from October, series of lower highs on the yield,
Hmm.
series of lower lows on the yield. That's a downtrend. It's not. Unless I'm seeing something that unless there's some squiggly line I'm not seeing from a technical technician perspective. That looks like a down channel.
Hmm.
So I don't like. Yeah, why couldn't the 10-year get to 3.5%, 3.3%, even 3%? It was a real fear move.
What
That's a big move.
the answer to that hypothetical question would be, I guess, a spike in inflation, unexpected rise in inflation.
But you just use the right word, which is expected
Hmm.
or unexpected. It's
Yeah.
like everyone's expecting inflation to reaccelerate under Trump.
Yeah.
Maybe they're going to be wrong.
Okay. So, finishing off mortgage rates. They've how is it in the U.S.? Because I know in the past month it's been going up in Canada. I think in some parts of the U.S. as well, which is strange because the 10 year is falling, and yet we have mortgage rates going up. So, what's up with that?
Well, I mean, it's tied to 10-year yields, as you know, the 30-year side to 30 side 10-year. Well, they rose when 10-year yields were rising. If there's, I haven't noticed recently if there's any sort of meaningful divergence, but if there is a divergence happening between 10-year yields and mortgage rates, that might be maybe some signs of cracking around consumer borrowing ability, right? I mean, the difference between the mortgage rate and the 10-year is ultimately going to be driven more by perception of default risk by borrowers,
Yes.
right? So, I mean, it'd be presumably one of the early signs of stress, but I'm not so sure that you can attribute that right now.
Okay. Great. Great overview. Thanks, Michael. Where can we learn more from you?
At Lee Lagerport on X, Instagram, Threads. Oh yes, and Blue Sky. I gotta say Blue Sky now. And then of course leadlagerport.substack.com.
Okay, we'll put the links down below. I've never used Blue Sky.
Don't.
So,
No.
it's okay. All right.
It's just you only have so many hours in the day, and it's just all these different social media networks based on political viewpoints. It drives me absolutely crazy because it's like, can't we all just like talk? Why do we have to like totally get out of one network to go into another network for confirmation bias and to live in the echo chamber
I
of the brand of the moment? It drives me crazy.
Yeah, people should just get out more and talk to each other. Well, okay. That isn't that a novel concept. Great.
Right.
Thanks for coming on, Michael. Always good to catch up with you. I'll put the links down below. People can follow Michael there. Speak next time. Cheers.